Many of you would have already received some notices from your bank advising you that your coronavirus loans, your SIVS loans, etc., borrowed during the height of the pandemic are due for earlier repayment, and you've got lots of options. A key question is, should you pay them back now or what? What should one do? Hi folks, my name is Mahmood. I'm an accountant in practice for over 26 years, and I'm here predominantly for a number of reasons. One is to improve your money mindset, help you make profit in your business, help you save time, help you save tax, and actually have the business lifestyle that you deserve. Now, in this particular short video, I'm going to talk to you about the loan repayments and should you or shouldn't you. Now, for myself, I actually took out a bounce back loan and I put it there, and I've advised all my clients to do likewise for two main reasons. In order to keep the wheels of your business going, the one key thing that you need is not actually making profit, believe it or not. That is always a long-term aspiration. It's about making sure cash is in the bank to pay your bills, pay yourself, pay your suppliers, make that investment and keep those business wheels turning. Cash, if you don't have it, you can say goodbye, close the lights on your way out, you will not survive. Now, more particularly on the bounce back loan, should you or shouldn't you, there's a few things I would recommend that you do before you make that final decision. Now, firstly, consider, have you actually put yourself together a cash flow forecast? If you haven't done that and you're not quite sure what's going to happen over the next, say, typically 6 to 12 months, I would thoroughly recommend that you get your act together, get yourself a cash flow forecast. It will typically tell your cash story about what's likely to happen over the next 12 months, what's likely to go out, and where do you think you'll be on a month-by-month basis. Now, you might be at home thinking, how on earth do I know, Mahmood? I can't predict the future. Absolutely right. However, it's saying about what your business ambitions are, what you think is likely to happen in your business landscape. Do a model, and by all means, please check out the resources on our website. We've got tons of stuff there about cash flow forecasting and guide. So that's task number one. Task number two, just remember this about the loan. The loan, like any form of debt, represents what's called a fixed cost to your business. So once you're committed to make repayments, then that represents an obligation that you've got to meet each month, irrespective of what happens. So obviously take that on board. Do you want that extra level of fixed costs or not, as the case is? Other factors to bear in mind. In terms of looking to have that ready amount of cash there, it may be that you're thinking it's a little bit too early to make that decision to give that cash back. The bounce back loan, one of the big things about the bounce back loan, that it was relatively inexpensive. We know certainly for the first year, there was no obligation, nothing to pay back, and it was a nice cushion which relieved a lot of anxiety. If you feel you need that cushion still for the next 12 months, then I would say keep it there. If you don't have any demands on that, keep it there, because the bounce back loan will not penalise you if you make ad hoc payments, if you pay back all once later on. The only thing you've got to consider is, do you think the interest rate of just over 2.5% is a worthwhile cost of maintaining that? It's tax deductible, it's relatively cheap, and therefore I would say if you're not 100% certain, then hang on to that cash. Also, the bounce back loan allows you to repay back lumps as and when you feel it without any penalty charges. And it's unlike most other forms of debt you take on, so that represents a good opportunity. So overall, just to summarise, look at your cash flow, look at what the demands are, what's coming in, what's going out. Check out our resource, and I'll give you some links in the website blog to actually tap into some further resources. Remember, debt represents a business risk to you. So if business is a bit wobbly, going down, then you've got a high level of risk. Also consider that debt is relatively cheap. And my considered advice is, if you're not quite out of the woods yet, you're not quite sure what's happening, hang on to it, pay that small amount of interest, make the repayments, and if you feel that things are getting much more better, you're feeling more confident, then pay it back accordingly. Now, there's a wonderful calculator, guys, that I'd like you to check out that will help you with gauging the level of business risk that you are. I've also put some headline rates in terms of the current cost of the bounce back loans. I hope you found that useful, and if you have found it useful, then I'd love it if you could share that with your friends and colleagues. Give me some comments back if you love that. Until next week, guys, take care.